Good afternoon, everybody, and welcome to Credit Chat. I'm Rod Griffin, Director of Consumer Education and Advocacy for Experian, and I'm here to answer your questions about credit reporting and credit scores and fraud and ID theft, all of those things that are so important, particularly now with what we're going through and making sure that you're managing or able to keep track of and use your credit report to help through this process and to make sure it stays in good shape through this national crisis. So, Ms. ED4, good to see you. Thanks for joining and being part of the chat today. I had hoped to be outside. It's absolutely glorious in Texas today. It's first day we've not had rain in 10 days. So, but there's enough wind. I was afraid that the mic wouldn't work, so I didn't want to mess with that. But I just about sat out on the back patio and had the call and got some sunshine because I could use some vitamin D. But I just want to stay inside so you could hear us. So I know, not yet. Give it time. It'll get there. It's supposed to be 80 degrees here today and tomorrow. So in Texas. So beautiful day. Dogs love it outside too. You can hear that. But going to stay inside the normal place so you can hear and we can talk to each other. But want to let you know we're continuing to do all of the things we're trying to do. We want to have these conversations because if there's something we can share with you to help as we go through the crisis. We know that for example, I'm under a shelter-in-place order now too in my home, so we can't travel like we should, and we're working remotely. All of those sorts of things, so it's affecting us more and more. I have family members whose jobs are now on hold, so it's affecting my family just like everybody else. And so, want to make sure we're talking, sharing information that you need. If you have questions about what's happening, what you can do, where we are as things evolve, and are able to keep you informed as well. So if you have questions, please feel free to ask. It doesn't have to be about coronavirus. If you have questions about your credit reports and credit scores, those sorts of things, happy to answer if I can. Shelter in place is my norm. I mean, I work from home so it's and have for the last year and a half. So it's sort of normal for me too. But there are the difference is that there are lots of restrictions on travel. For example, I'm in Collin County, Texas. I'm about 2 blocks from the Dallas County border, and Dallas County in Texas has the Dallas County judge, who's kind of the authority there, said that if you have a non-essential job outside of Dallas County and you leave Dallas County under their shelter-in-place rules, don't come back. So basically, you need to stay at home and not be going places where you could transmit the virus. And so it's serious right now, and we're all trying to take it seriously. And so if you're going to work outside of Dallas County, he said if it's not essential, that I don't know how they enforce that, but very serious, and we're taking it very seriously. So and I think that's important. Want to get approved for a house. How long before the interest rate will fall? So Shep Daddy, it's hard to say, and not exactly my kind of bailiwick, to use an old term, my area of expertise, because with the credit reporting and our credit reporting systems, what we do is provide your credit history information to help you qualify for the best terms and rates, which means we can help you manage that credit report, make sure it's in great shape, make sure your credit scores are in good condition, ready to go when that best rate happens. The challenge with mortgages is that the mortgage rate moves up and down. We know that the Federal Reserve Bank has dropped the interest rates, which is not on consumers, and that's sometimes a confusion. They've reduced the interest rate for the money they lend to banks. And what usually happens is the banks then will pass along some of that to the consumer, so the rates will come down. And so, it's hard to say when and how long it will last. Talk to a mortgage lender. Visit Fannie Mae and Freddie Mac online. They're the mortgage loan underwriters online. People like that who deal with those kinds of lending situations day to day would give you a better sense, who are in the mortgage market. Mortgages are very different than just about any other kind of lending. There's so many rules and regulations and processes and procedures, and they take so long. And in fact, mortgage rates can change during the process. So it's really very complex. So talk to a mortgage lender, get pre-qualified or pre-approved so that you know what you will qualify for in terms of a mortgage loan. That can give you a sense of where you start to look and what the rates might be that you would expect, and do that early. I always recommend you check 3 to 6 months in advance, make sure your report's in good shape, and that way you'll know exactly what to look for. You can shop for mortgage rates and not have to worry about it affecting your credit reports or scores. So the scoring systems recognize mortgage inquiries and only count them as one. In the older systems, in the newer scores, they won't count them at all. So you can shop for the best rates. Don't have to worry about your credit score. So make sure you're in good shape. Get ready and prepare, and then when you see them come down, talk to mortgage lender, be ready to buy. But it's always mortgage and buying a house is a whole different process than anything that I've ever experienced. And I bought my house 20 years ago, so or I'm still buying it, but almost we're getting there. But moved in 20 years ago. Is it true you don't have to pay your mortgage right now? I'm in New York, so everything is shut down. So there are regulations going into place. It's best to talk again with your mortgage lender, because they are, in some cases, delaying or lifting mortgage payment requirements, not requiring them. But it's state by state, which is part of the challenge with the responses that we have, and the nature of our governmental system. Our society is we're state by state. Some cases, like in Texas, it's county by county, and in some instances municipality by so city by city. So check with your state attorney's general office. You may be able to find information there. Check with a mortgage lender. They'll be able to tell you, and if you have a mortgage lender, they'll be able to tell you whether or not your payments have been suspended at this point. But if you can continue to make them on time, that's usually the best thing to do as we go through this process. There are tools and options available to lenders that, as we move forward, I think will become more and more available to you to make sure that your credit history is protected, that your mortgage is protected. So very unique time, as we all know. Can we get approved while this is going on? Yeah, I mean, I don't think, Chef Daddy, I think right now the lenders, the banks are open. The hard part is going to be that you can't really go to open houses, for example, finding homes. I mean, if you're shopping online and you want to buy sight unseen, perhaps, but I think just in what I'm seeing and hearing, and just business in general, if it's not an essential business, it's going to be hard to make that purchase. Not because banking isn't open, because banks are, and financial services like Experian are considered essential. So we're up, we're running, we're doing business, and where possible, we're remote. So most of Experian's employees, for example, are working remotely to make sure that we are abiding by the shelter-in-place and social distancing requirements, those sorts of things, and to help protect our employees. And that's true all the way to our CEO. So, we're really lucky to work for a company that is, and our leadership is taking it very seriously. That's the challenge. So being able to go look at a house, being able to work with someone, I don't know if the mortgage industry is exempt. And in terms of realtors and home sales, I don't know. That's something that you'll need to talk to a realtor about, talk to your mortgage lender about. But basic banking services are open. So theoretically, I suppose you could buy a house, especially if it's through an online process, an application process. As far as I know. But again, I would check with a mortgage lender. Working ahead to pay down and pay off what I have. Should I close after paying off? So if you're paying down debt, if you're talking about credit cards in particular, look at your overall financial picture. One of the things that I'm telling people and stressing to people right now is that as we're going through what we're going through, your credit scores may not be the most important thing to worry about right now, right? Or your credit report. We have friends and family that are being affected by this, and as I mentioned, in terms of job loss, in terms of suspension of work until this passes. And so, I know lots of people in the situation that their concern right now, as it should be, is how do I compensate for reduced income? How do I make sure I'm providing for my family? How do I make sure I'm staying well? How do I make sure that we're putting food on the table and keeping a roof over our heads, not necessarily what's my credit report look like and what are my scores. I think in time that's going to become important, and that's why we want to have this conversation now, so that when as our society shifts back, we're looking at and making sure we're protecting those credit histories, and they're there to work for you when the economy reboots and we start working again full scale, and job market comes back, and the economy opens and the restaurants are open and all those things. So right now, look at your overall financial picture. Make sure that you're doing the essential things first. Check your credit report. It's free. Make sure you know what's there and it's being reported correctly. Talk to your lenders if there are issues that you may be facing or concerns that you have, so that you can protect that credit history and they can work with you on managing the debts you owe. And then as things evolve, make sure your credit score is in good shape and you'll be able to move forward. So we want it to be as seamless as possible. So when we talk about credit reports and scores, I tell everybody they have their proper place. And right now, we're 2 weeks in. That may not be the top of mind on the list or top priority, but it will move up as time goes on, as we start getting back to normal lives. So be aware of it. Check that report when it's the proper time for you. When you pay down accounts, the reason all that leads into, if you pay off an account, you have a zero balance, that's fantastic. That's good for your credit scores, especially with credit cards. The lower your utilization rate on your revolving accounts, your lower your balances as compared to your limits on your credit cards, is the second most important factor in score. So if you can make sure your payments are reported on time, and then you're reducing those debts, fantastic. Whether or not you should close the account depends on where you are now, where you want to be in the future. So if you're planning to apply for credit in the next 3 to 6 months, as we move through this process, probably best to leave the account open, because when you close it, you lose the available credit limit. That's going to affect the utilization rate as a matter of math, not because you've done anything wrong, but because you've closed the account. So any balances remaining on your open accounts will look like and are a higher percentage of your available credit. And so your utilization rate will cause those scores to dip initially. If you give it some time, they'll usually bounce back up. But better if you're planning to buy a house, for example, or you're making a major purchase, leave them open. If you're not planning to make a major purchase, aren't going to need that account in the near future, have other credit resources or financial resources, you might close it. Your score then becomes a less important factor, because it's going to come down some, but it will usually bounce back up. So give it, but if you have time, you'll probably be back where it was, because it becomes clear you didn't take on a lot of debt. That's not what caused your utilization rate to change. It's that you closed an account. So time is an important factor. So look at your overall financial picture, your overall financial needs going forward. That's going to be really important. I lost my job and have no income. How much will I qualify for? So Alexis Charlebois, probably said that wrong. I'm sorry. I tried, and I'm sorry if I did. Right now, one of the things lenders must do is verify your ability to repay a loan. Your income, your assets are not part of a credit report, but lenders must verify that you can repay the debt. So if you have no income, you have no resources, may not be able to qualify, and that's probably better. You don't want to take on debt if you can't repay it. That can just make your financial situation worse. So looking at the overall financial picture, nobody wants to be told no. Sometimes it's the right answer. It just depends on your situation. But with no income, it's going to be hard to repay a debt. It's going to be difficult. And now if it's temporary, as we go through what we're going through now with coronavirus, and your job's going to come back, then you may be able to work on some other options, perhaps. But again, another question to ask a lender: what you qualify for, where your overall financial situation is, and what you need to do. So just looking up at the clock, I forgot. I'm going to have to jump off a little early today. I have a media and interview call at 2, so I'm going to jump off probably about 5 or 10 till. So just so you know, not that I want to cut it short, because I love answering the questions you have. Can't make any stock recommendations. Don't know who that is, and I would be the wrong person to ask about investing. My philosophy: invest at least there's my investing advice, and as far as I go, if you're in a company that offers a 401k and they offer a match, invest at least to that match in as much as you can, and then be consistent and don't look at it. So especially now, not a good time to look at the stock market because it's kind of terrifying. So leave it alone. Call Warren Buffett about how to invest. Mortgage advisor here in UK is business as usual. That's awesome, Mr. Dan H. Yeah, and I'm in North America, in the US, so you can't speak to what's happening in the UK. North America, I know business as in general is not what it normally is. So I'm not sure, and I haven't talked to a realtor or a mortgage lender in the last few days, except that I do know one realtor who said that she's not able to go into her office, so she can't really work. So that could be disrupting it. Solopism, thanks for joining. Claudio EOC, I probably said that horribly wrong. I know I did. I'm sorry about that, but thanks for being here. When you pay off accounts, how long before your score changes? So great question, Navio. When you pay off an account, the lender will update its records in its systems. They typically report the account at the end of the billing cycle. So it could be as long as 30 to 45 days from the time you paid off that account to the time it's updated with Experian and then shown in your credit report as being paid. So once that status is shown as paid, shown in the credit report, at that point, the next time your report's requested and a score is applied, that score would reflect that change. So I always recommend you allow 30 to 45 days anytime you make a major change to check your credit history, make sure the change is there, and then you'll see what the impact is on your score initially. Over time, if you pay something off, you may see an initial decline in your score. That's an oddity of scores because big change in payment status. Give it another month or two. It's always time is crucial. If you make a change, don't look at your score and report right away, because you may not see the change at all. And if you do see a change, it could be a little kind of arc down, and then it will a few points, and then it'll come back up. So be patient, but allow 30 to 45 days for it to appear in your credit report. Once it's in the report and the account showed as paid as the payment status, it will affect the scores, and the scores will show that change. So it takes that time. Plants on fire 210. I can't give legal advice. You need to talk with an attorney. It would be better there than I would be. Latonia 888. Medical bills included in a score. Medical collections can be. Medical bills that you owe that are not in collections will not. We do not include in credit reports just medical bills, right? So if you have a medical care that you're paying for and it's not in collections, it's not going to be in your credit report. Medical collections can be reported. Once they are paid and shown as paid, like we just talked about, they will no longer affect the newest scoring system. So FICO 8, FICO 9, FICO 10, Vantage Score 3.0, 4.0 would essentially, for lack of a better way to describe it, ignore a paid collection, medical collection, so it wouldn't affect your scores. Older scoring systems, once paid, it will have less effect on that score. And even before that, medical collections today have less effect than other kinds of collections on scores, but medical collections can be reported. Glitchin 1991, thanks for joining. Livity Between Us, thanks for being here and for inviting your followers. I always appreciate that. Mel Carey, thanks for being on Periscope. I hope you're enjoying the chat. If you have questions about credit reporting, credit scoring, fraud, ID theft, I'm the guy to talk to. I'm Rod Griffin. I'm Director of Consumer Education and Advocacy for Experian. This is Credit Chat. If it's your first time here, thanks for being here. I try to be here Tuesdays and Thursdays, 1:30 Central, 2:30 Eastern, just to answer your questions about all of the things that are important about what Experian does: credit reporting, credit scoring, fraud, and ID theft, and things that can affect your financial lives. And as we know, we're going through a time where that's a reality for lots of us. Just heard of a secured loan for credit building to diversify my credit profile. What are they? So Candace 306, a secured loan or a secured credit card can be two different things. A secured credit card is typically an account where you put money in a savings account with a credit union or a bank, and then they issue you a credit card that's tied to that savings account. And then you use that credit card just like you would any other card. It's reported to Experian the payment history, so paying on time, paying late. If you are unable to pay that debt as agreed, the lender can take the payment amount out of the savings account. They would still report the account as late. So the security is for the bank in that case, similar to a secured loan. A secured loan can also be a collateralized loan. So there's collateral that if you fail to pay, the lender can take that collateral. So they can repossess a car, for example. So you're buying something tangible, your house in the case of a mortgage, that they can then sell to recoup that loss, or at least some of it. So a secured credit card is a great way to start building credit, pretty safe, and it helps you begin to build a savings account at the same time, which can be really positive because now you have some emergency savings. Make a small purchase every month, $10, $15, $20, pay it in full right away, so you're not carrying a balance, and it will help you build that positive history. What's a credit account with lots of nines? So that's a code that lenders see in a lender's version of the report that just says that I'm trying to remember now, so we haven't looked at codes for so long because it's plain English. Nines usually mean serious delinquency. But it's very delinquent, potentially collection account. If I remember my codes right, it's been a long time since I've looked at the codes. I need to look it up. But when your personal report, instead of nines, it will say this account's 90 days late or 180 days late, charged off. So you don't have to worry about those numbers. That's why we recommend you get your personal report, not a lender's version. It's the same information. It's just that a lender's version is made to be reviewed in a computer. And so it spits out when you see a printed version, lots of codes because computers crunch numbers, don't actually use words. So there's zeros and ones, and in this case, nines and whatever it might be that they come out. So it's a coded version. Code is going to be a scary word. It shouldn't be. It just means that it's programmed to be reviewed electronically. So that's why we give you a personal report, what we call a consumer disclosure, a consumer's version that spells everything out. So you don't need any special training. You don't have to decipher codes. It's all right there, and very plain English tells you who the lender is, what the account balance is, what your credit limit is, what your payment history is. So it takes away that confusion. So that's what the nines are all about. Good afternoon. Thanks for joining. Candle 306. Hi, we'll wait. Bluesky, welcome to Periscope. You should only spend money you have. I'm sorry for mispronouncing that. Agree. You should never use credit as additional income. You will find that will backfire. Credit's a financial tool. Debt's a financial problem. And I say that over and over and over. Credit can help you be more financially successful if you use it well. If, for example, you have a credit card and it lets you get airline miles or bonus points toward that you can use for cash to make other purchases or discounts or insurance discounts, using that card to make a purchase and then paying it in full. So you're not using money you don't have, but you're paying it in full to take advantage of those incentives can be a financial benefit. If you're taking on debt you cannot afford to repay, then your debt becomes a financial problem. And that's what we don't want to have happen. We want you to use credit as a financial tool. We want it to be there to work for you. The best example with credit is that if you want to buy a house, most of us can't come up with $100,000 or $200,000 or $500,000 to buy a house. But if you have a good credit history, it can help you buy that house over time. That's an investment over time and can actually work to your advantage in most cases. But buy a house because you want to live in the house and make those payments. And so it helps you in that regard too. So good credit is way different than bad debt. And I always try to stress that. Lucky Alex won. Our government needs to listen to me. Well, it is what it is. I'm pretty much totally unelectable because I'm far too moderate on things and kind of, I'm not electable, I don't think. And I don't think I have the personality to be there and do the things they do. So don't expect to see me in Congress anytime soon, I don't think. Don't buy a new car if you don't have the full money. That's always a debate, and how much you should finance. So, and it's very personal as well. Don't care about my credit choices, my decisions. So, and they are the decisions you have to make. And so You know, and to make sure that you have the information you need to make the decisions that are right for you. And that's what's so important about having these conversations. And I do so appreciate you participating. I'm going to have to jump off. Hello from Michigan, budding lover too. I'm sorry, I've got to jump off to get on another call today. But thank you all so much for being part of the chat today. I'm Rod Griffin. I'm Director of Consumer Education and Advocacy for Experian. If you're just joining, join us tomorrow on Twitter. We're having a Twitter chat about how to manage your financial life and your credit through the coronavirus crisis that we're going through right now. So it will be a great conversation. You can learn more about it at ex.pn/credit chat. I'll try to be here again Thursday, 1:30 Central, 2:30 Eastern. My plan to be. So hope to see you all there and share. If you have questions, please bring them. We'll do our very best to answer. The information you have helps me as well, and it helps me go back to our leadership and our product developers and others to say, here's what people are telling me they need and what we need to work on. So I do share that information. So thank you for all the hearts. Thank you for being part of the Credit Chat today. Have a great rest of the day. Hope you join us tomorrow, 2 o'clock Central, 3 Eastern on Credit Chat. I'll talk to you all very soon. Take care, everybody. Stay well. Stay safe.